Hi guys, welcome to our second part of our discussion on the budget expectations. Now we discussed the problems of the economy. Now let's see what options the government has at its disposal to bring the economy out of this mess. Okay,
Perfect.
and what we can expect from it.
Yes. So, for that, let's have a look at what economy needs. Obviously, boost in investment for capital formation.
As we saw that capital formation is not happening.
Correct. Credit creation through banks.
Yeah.
That will give banks the healthy status, healthy state, and it will be beneficial for the future requirements.
Yeah.
Increase in exports.
So, exports last month went minus 1%.
Correct.
Okay, in the negative territory, which is alarming.
Correct.
Okay.
Correct.
That is one thing. Even credit creation, we saw that banks' credit offtake is not really taking place.
Now, growth in private investment and private consumption has to be there. We have seen this through numbers. Employment increase and money in the hands of people so that they will consume and the entire economic cycle will kick off.
Correct. So these are the basic requirements that we have for the economy. Now for this, what has the government already been doing?
Correct. Because in last month, our minister, nirmalasitaraman, she has gave up complete full-fledged presentations on government's intervention.
Correct.
And these are the few interventions. You can go online, go on the website, government's website and check it out. Now, our main thing is all these interventions, in each and every intervention, government is promising lakhs of crores. Correct? Lakhs of crores. You heard it right. They have already given tax rates, rate cuts.
Yeah, they have drastically slashed the corporate tax.
Correct? Now, be it infrastructure pipeline, be it
the 5 lakh crore infrastructure.
5 lakh crore in 5 years. That means 1 lakh crore requirement every year.
Correct.
Correct? Apart from that, they need to kickstart these stalled projects for realty, for infrastructure. That is going to require money. That is going to take money. From where the question is, all these promises are one thing.
Where are they going to get the money from?
Yes, that is the key question.
Right.
Now, have a look at sources of funds.
Right.
There may be other, but the key are revenue receipts.
Right.
That is from
our taxes majorly.
Money fundraising through bonds. RBI dividends. Now, the majority portion of RBI dividends government has taken benefit of that in the last year.
Yeah.
Now, currently, it will not be a blockbuster thing.
Some dividend, basically.
Yes, it will be there, but not be the blockbuster like lakhs of crores last year. Correct? Money through FDI and external borrowings.
Yeah.
These are the sources. But the key question is, does government have headroom or capacity to raise money through this?
Yeah. How much revenue is the government going to receive? How many bonds are they going to be able to be issued this year? How much dividend, RBI dividend can they expect? All these things we will discuss in the next few minutes.
And that too with the help of numbers.
With numbers, of course.
Let's kickstart, guys.
Right. So now this is just a overall of the revenue receipts and the capital receipts of the government. Revenue receipts is coming majorly from our tax revenue and non-tax revenue. Tax revenue as corporate tax, income tax, your GST, excise duty, customs duty and union territory, whatever taxes are charged. Okay. Non-tax revenue is basically coming from your interest receipts from dividends and profits of all public sector companies, etc. Other non-tax revenues and revenue received from union territories. Now, these comprise the total revenue receipts. Similarly, whatever the government borrows from the market, okay, that is your debt receipts. And then there are certain receipts which are non-debt receipts. Basically, whatever government has loaned out to people and they are able to recover from that. So,
this is a broad structure of entire thing.
So, your debt receipts have your market loans, your T-bills, and other receipts and securities from PF and all those things.
Yes.
Okay.
Yes.
So this is a broad structure. Now let's look at the chart.
So guys, This is the chart of revenue receipts. We will go through all these numbers in much detailed manner, but I just want to point out one thing. In 1995-96, our revenue receipts were at 1.1 lakh. 1.1 lakh. Okay, this
Crore.
Yes, crore, obviously 1.1 lakh crore. This shows how exponentially we have grown.
So it's been 25 years to this, and we have grown almost 20 times.
Almost 20 times. Correct.
Yeah.
These are revenue tax receipts. Okay. Our revenue tax receipts were 16.5 lakh crores.
Yeah, the central government revenue tax receipts were to the tune of 16.517 lakh crores. Yeah.
And this is net number, net to center.
Yeah.
Correct? This is net to center number.
What central government has received. Now from the tax that it has received, okay, I'll tell you the number. 24 lakh crore is the amount of tax, total tax received by the government.
Total tax, not net to center, but total tax.
Out of that, 8 lakh crores is passed on to the states, leaving 16 lakh crores with the government.
Perfect.
Okay, 16.5 something. And this is the breakup of that 24 lakh crore, where that came from. Okay, you can see that 31% came from income tax, 23% corporate tax, 23% came from income tax. Okay, so this is your direct tax.
Perfect.
Okay, 21% comes from CGST. Now in this we have not considered SGST.
Yes, because they have,
that is directly gone. So CGST is 21%. Okay, and then there is your union excise duty and custom duty and other taxes. So this is your tax breakup of the government. Now let me show you the Excel of that also. This is the Excel, okay, of the revenue receipts. Now as I showed you, okay, one moment. Here. So this is your total gross tax revenue obtained by the government. Okay. Of that, this is 24.6 lakhs crores. 8 lakh crores is gone to the states, and 16.5 lakhs is retained by this. Okay, by the government. Apart from this, this is your non-tax revenue of the government. You see where this comes from. This comes from your interest receipts, dividend and profit received by the government. That is almost 1.91 lakh crores. Okay, so almost 2 lakh crores.
Perfect.
Other non-tax revenue is 4 lakh crores. Then general services is 0.5 lakh crores. Defense, they are making some revenue negligible. Economic services. So whatever government is doing in all these things, railways and animal
all the government related services,
all your RA Dood and everything,
correct.
Shipping, tourism, whatever your government is doing, from all these things, it is getting 3.5 lakh crores. Okay, so in total, if you were to see, the government gets 22.5 lakh crore rupees as total revenue receipts of the central government.
Central government.
So 16 lakhs crores, 16.5 lakh crore comes from the taxes.
Perfect.
And the remaining amount,
5 lakh, 6 lakh.
6 lakh crores,
correct,
comes from all these other activities.
Correct.
Total 22.5 lakh crores the government gets.
Perfect.
Okay. The breakup we saw of the taxes. Now, let's see the expenses of the government. Where does all this money be spent?
Correct.
So now the government total receives 22.6 lakh crores, but it actually spends 27.3 lakh crores based on last year's budget.
Correct.
Okay, so our budget is a deficit budget.
It has to be. Correct.
So there is always going to be a difference between how much it receives and how much it spends. And the spendings are going to be higher.
And they need to raise that money.
So the government has spent, has budgeted to spend in the previous budget 27.3 lakh crores.
Correct.
Okay. And it had received 22.6 lakh crores.
Correct.
So the remaining amount, which is around 4.8 lakh crores or something, that is your revenue deficit.
Correct.
Okay. Which needs to be filled up through loans and all those things. So we'll see that later. Now, this 27.5 lakh crores, you just have a look where the government is spending all that. Okay. So, for that, we've got this one chart out here. Okay.
Expenditure.
The expenditure chart. General services mein, the government is spending 44%. Okay. Social services mein, government is spending 5%.
Mm-hmm.
Economic services mein, government is spending 33%. And grants and aid is 18%. Now,
Perfect.
this grants and aid wala section is the grants given to the state governments by the central government. Okay, majorly it's that. Now, let's see all that. This is your general services section. You can see this, right? So, all these things come under that. Okay. What are general services? Cost of the government itself, cost of the establishment itself. So, all your parliamentary costs, election costs, tax collection cost, fiscal services cost. In this, the major portion is your servicing of government debt and the interest that the government has to pay. Okay, that is this. Okay.
So if are spending 6.7 lakh crores
in just paying your interest,
in just
and,
paying our
your
interest,
debt servicing, basically.
Perfect. So the idea of keeping fiscal deficit down below 3% is gone out of the window.
Yeah.
Correct? Because we are paying this much. Apart from that, our revenue gone out of the window. Straightforward.
Absolutely.
Correct? Yes.
So see, total 12 lakh crore is spent by the government on general services. Okay, that is your government expenditure. Of which 6 lakh crores is spent on interest itself, 6.7 lakhs.
Oh.
Okay, 2 lakh 9,000 crores is spent on defense.
Correct.
Okay, and rest all is spent in its own expenses and all.
Perfect.
So this is your general services accounting for 44% of 27.6 lakh crore expenditure.
Correct.
Now, social services, government spends 5% of that 24 lakh, that is 1 lakh 20 of the 27 lakh crores, that is 1 lakh 28,000 crores. Now, social services is related to upliftment of your lifestyle. So,
Correct.
Education aa gaya,
Sports, art and culture,
medical aa gaya,
family welfare,
family aa gaya, all
water
those
supply and
things.
everything. Correct.
Everything. And in this also, general education is like 30% of this entire sum. Okay,
Of
medical is
social service.
of the social sum.
Correct.
20% of that is medical. 10% is labor and skill development. 8% is natural calamity relief, and then rest all is dispersed in tiny amounts.
Correct.
Okay. Now, out of the 27.6 lakh crores, 9 lakh crores are spent on economic services. Now, this is what you and I are concerned with most.
Correct.
Why? Because everything comes here. Your agriculture activities are these. Your rural activities are these. Okay, rural development. Then special area programs are development for northeastern India.
Corridor.
Okay, which has been showing up in the last 2-3 budgets. This is your irrigation and flood control. You can see for irrigation there's only 3,300 crores which the government has allocated out of 27 lakh crores.
Correct.
In a rural economy which is based on agro. Now, this is a
and
blasphemy.
with the burst irrigation infrastructure.
Correct.
Correct.
So this is a blasphemy.
Yep.
that the
Has to
government
be.
is
Has to be.
Then there's energy, industry, transport. On transport, okay, if you see, government is spending 2.29 lakh crores.
Huge chunk.
Yeah, which is almost 8% of your
the
27 lakh crores.
Entire budget.
Of
Correct.
the entire thing. But the joke here is that these amounts are for the railway.
Almost
Okay,
everything
which
is for the railway.
Yeah, which is 2,16,000 crores. It's spending on the railway out of 2,29,000.
So only 13,000 is going to rest of them.
Yeah, 12,500 crores is what is going to other transport, which comprises of shipping, civil aviation,
Everything.
roads, and inland water transport.
Wow. That is the joke. That is the joke. Yes, definitely.
So that is a joke. Okay. So these are small hidden pockets that you find out in the budget. Okay. Your general economic services, you have a tourism number. Okay. Now tourism is a major exchange earner
Correct.
for the economy, and tourism is
Only 2,000 crore.
only 2,000 crore. Now, one can argue that okay, railway and all those things are tourism only, transport. railway ka beautification and all, station all. So maybe the number may be higher for tourism per se, but this is ridiculous.
This is ridiculous because the beautification of railways and routes and everything, that is also for us common people. So this money is specific to tourism and the upliftment of tourism industry, and this is nothing.
Yeah, and tourism is a major exchange earner for you. Because you straight away earn in foreign exchange.
Correct.
Tourism.
And this number is after this government has made tourism as their one of the key criteria. Correct for development, and still it is 2000.
Still it is so less.
Correct.
Okay.
So, but the question is now, I know guys why you are thinking. You must be thinking that why we are going through everything in detail. Two things. Government wants money. That money either it is going to come from increasing revenue or by controlling the costs.
Or reshuffling the expenditure.
Like
2 lakh crores is going to defense. 2,09,000 crores.
Okay.
Correct. What if they were to shuffle it? I don't know. They may not. They will obviously not shuffle it. But 2,16,000 crores is going to the railway.
Correct.
What if they were to shuffle that?
Is it possible? That's the question.
Means for transport 2,30,000 crore is there. Maybe they can give some kind of a more allocation to other transport and less to railway.
But having said that, I got your point that they have to find a way where they get money. They get money at the end in their hand through this entire ordeal.
Yeah.
But if you look at from the growing economies point of view, if you look at the expenditure chart, there is very less scope to reshuffle. Because social services requires money.
And so does economic services.
We requires money.
Spending too much on general services. That is at the blatant level you can see this.
Correct. But do you think that by curbing this or reshuffling this expenditure will find the solution for us?
I don't know, but I want to see more allocations to this economic services wala aspect in the new budget.
Correct.
That is all I am trying to say here.
So it can be like whatever the current expenditure, it will grow, and then from that the allocation will be higher.
Yeah, so now getting to that, okay, this is the last bit of Excel that I'm going to show you, so please bear with me. Now how, going that, you see this tax ka this thing, okay?
Correct.
Now you are seeing that between the 18-19 revised estimates and the budget estimates of 19-20, your taxes have grown 10%. Okay, your expectation estimates have grown 10%. Okay, that's why you have 13.2 lakh crores here and another 11 lakh crores here. Okay, now you tell me that do you expect this same growth to continue in 2021?
Now,
seeing that the year that we've had.
Correct. So there are two aspects we have just discussed, that people will be like, even we want tax cut.
Yeah.
Even we want tax rate cut because you are giving it to corporates. And if you see the psychology in our country, the corporates are biggie guys, top of the pyramid guys.
Yeah.
You are giving it to them. Even we want.
The corporate tax is gone to the big companies.
Correct. Okay. It is no use for the common people.
Yeah. At max, salaried people may benefit slightly by increase in their salary. But
Correct. That's it.
Now, if you consider income tax, that is also being paid by 6 or 7 crore people.
Perfect.
So if you get away with that or you reduce that, that's going to benefit 6.7 crore, 6-7 crore people. What about the remaining 123 crore people in your nation? They are not going to be benefited by this tax.
Yes, agreed. But if you take this government or previous governments, they all talk about urban, semi-urban, middle-class people because they are the common focal point because they are well known. They speak about their distress and everything. That's why they try to keep these guys happy. And having said that, our middle class is also increasing in size.
Right.
So whatever be the rationale, they try to give these guys some benefit.
But now if I were to project these values for the future,
so there is very
this
little
is
chance
your,
to grow.
Yeah, this is your 16.5 lakh crore tax obtained by central government
Perfect.
total after giving the state
Everything, yes.
It won't grow more than the inflation.
No, it won't, because if you consider the tax relief which they are going to give this time, it won't
It
grow.
will probably even reduce.
It won't grow.
But even if I were to give a modest inflation wala 4% growth to this, so this 16.5 lakh crore will become 17.1 lakh crore, and that's the end of it.
That's the end of it. And if you see the expenditure side,
right,
it requires more than this.
Correct.
Growth.
So now on this table, we are talking about some kind of a fiscal slippage that can happen,
and that
in the economy
has to happen in the economy.
Correct. So fiscal deficit is going to now topple further. Now they are saying fiscal deficit is 3.5%.
Correct.
Okay, now
which is 7 lakh in absolute terms. 7 lakh crores in absolute terms.
Yeah. So now people are saying that fiscal deficit will have to go up, and
Yes.
I also agree to that point to some extent.
So, and
that is probably will have to go up.
Yes, and if you look at the interventions which government has done and the promises which government has given to all these sectors, this number year by year has to go up.
Yeah, they have to get some money in to spend more.
Yes, in terms of percentages, we are talking about percentage of GDP.
Absolutely.
Current percentage of GDP, it is going round about 3.3 and at 7 lakh crores. 3.3% of the GDP and 7 lakh crores. Now this number has to go up. Everyone agrees to this. But our question is, what is the headroom?
Yeah, how much can it go up, and do we have that kind of a juice in this for it to go up?
Correct. And to discuss that, we need to consider one more important factor.
Before we go on to that factor, just look at this. In the past, our fiscal deficit has gone down to 2.5. It has been up above 6 levels on 2 occasions.
Correct.
Almost near 6 on this third occasion. And now we are again near 3.5.
And
so on paper, you can probably go up to 6%.
On paper. Okay. Now, guys, let me tell you this. Let me just share some information. This period of 2.5, it was the prosperous years of Indian economy in last 2 decades.
Correct.
Just before the crisis.
Yeah, 2007-8.
Yes.
Yeah.
And this is just after the crisis, 6.8. Correct.
Yeah.
This is the QE which we started at that time in 2009, post 2009. This all effect is because of that, these 2 things. Okay. And then we as a country were able to brought back this fiscal deficit below 3.5%. Correct.
So on paper, there's a headroom to bring it back to 6%.
It is possible, it is not possible, and we are not talking about the repercussions. We are just talking about our highest point was 6.5.
Correct. But there is one factor which is hindering it.
Okay.
Yeah. So that factor is off-balance sheet items.
So guys, these off-balance sheet items, people are talking about that government is doing some kind of engineering. Correct. So Food Corporation of India plays very important role in procurement of crops from farmers. Okay. And during this entire process involves food subsidy. Now this food subsidy, normally it should be bared by the government. It should be on the books of government. But what happens in last 2 years, Food Corporation of India, this company is bearing that subsidy. Obviously government company, but this company is funding this subsidy through loans on Food Corporation of India's books.
Own debt.
Correct. So in 2018, the debt was 0.7 lakh crore. In 19, it was 1.96 lakh crore. So in current fiscal deficit numbers, this debt, this 1 lakh crore is not involved.
Correct.
That means our fiscal deficit is not at 3.3. It is much more. It is above 4%.
Correct. So if you add 1.5 lakh crores to 7 lakh crores, it becomes 8.5 lakh crores.
Correct.
Okay, that gives our fiscal deficit number to be 4.25%.
4.25%.
So your headroom is now reduced to that extent.
Yes, that 1%.
Yeah.
Okay.
So, like we said, it can come up to 6, but it's not from 3.5 to 6, if you have to consider this, in all honesty, it should be considered because
Correct.
it's a loan at the end of the day.
Correct.
If this is considered, it is from 4.25 to 6 that the headroom is there actually.
Correct. And again, we are not talking about 6 to be a good number or bad number.
Absolutely. Our ratings are already negative.
Negative.
Either way,
Correct.
our bond ratings.
Correct.
So a fiscal slippage out there is obviously going to tank the ratings further.
Yes, and in this entire discussion, we in TMR thinks that this is not the time to think about ratings in short period.
Yeah.
To think about ratings or think about all these indices which we focus on in the normal situation.
Yeah.
This is the critical time.
It's a time to take short-term risks, and maybe there should be a fiscal slippage, but it should be done smartly.
Yes.
As we'll discuss in our recommendations section.
Further. Now, third point was through FDI government. So first point was from revenue they can earn more. Second point, fiscal
Reshape
deficit.
the expenditure.
Yes. Third point, fiscal deficit. They can get money to spend. Fourth point, FDI. Now, this is the positive news in the entire PPT. Correct? If you see, from 2000 to 2019-20, cumulatively, governments or the Indian government got 25 lakhs 60,000 crore FDI inflow. Correct? 25 lakhs FDI inflow. 25
Correct.
lakh crores.
25.6 lakh
Crores.
Yeah.
Correct? And post 2014, we have got
12 lakh crores.
12 lakh crores. That means 50% of our entire cumulative FDI
Has
we
come
received
in the last 6 years.
in last 6 years. Having said that, Janak, where is the money? Where is the activity? Where is the industrial activity?
Correct. Now, either that money has become loss like Flipkart, but
Yes.
that is not likely to be the scene.
Correct, because we are talking about FIIs.
Yeah. and
They
are
are smart and sophisticated.
Yeah.
Correct. Or they are sitting on the sidelines because demonetization was there, GST was there. They want to be clear what is going to happen. And then they invested the money, and that money is now in the work in progress, and it is not reflecting in the final thing.
Correct. So the outcome of this money which has been infused in equity, okay, over the last few years, will probably show up in the next few years, and that will show up, add to our GDP numbers sooner or later.
Correct. And the one of the signal of this was our purchasing managers index. It was
PMI.
Yes, it was very good in the first. They published that number in the first week of January, and it was a good sign. Having said that, it is just a one-off number. Sustainability.
Let's hope for sustainability.
Yes, let's hope for sustainability. Okay. Now, the bad part of this is, and I'm not criticizing anyone. I'm not criticizing anyone. No government, no foreigners.
The cost of this,
Everything will go in the hands of foreigners. Kind of.
They will have a stake in everything.
Yes,
basically.
and at that too at a lowest price. Correct. Now, is there any other way? Through bonds.
Right.
Bonds in a domestic market and overseas sovereign bonds. Correct.
Now, due to the recent crash in the bond market, the NBFC crisis which happened, the demand for domestic long-term bonds is actually on the lower side, and RBI has to actually do that operation twist to provide support to the longer-term government bonds. So that is one point that needs to be kept in the mind.
Correct. And hence, government is all about let's go in a foreign shores and let's leverage that and bring that money in.
Correct. In July, the finance minister said that we'll have to now consider external borrowings, and we are going to open up channels of that also.
Correct. And if you see our external debt to GDP, it is very comfortable zone. It is at very comfortable zone. Hence, we can do this.
Correct.
But let's talk about hazards of external debt and why we think this external debt situation is very critical now. We are talking about external debt and hazards because we are in 2019.
Yeah.
If it would have been 2014, our view
would probably be different. It would be a good time to probably look for external debt.
But right now it's not, just because potential impact of overinflated central bank's balance sheet.
Right.
If you see, Janak, which countries? US,
Eurozone,
Japan, all these countries, they have printed and injected money in
Through
their
QE.
economy. Correct? It's
Yeah.
since last 10-15 years, 10 years rather. Okay. Now some of them they have stopped. Some in Eurozone it is still going on. So the entire the bank's balance sheet, it has inflated. Correct? If you listen to all the global economists, if you listen to Stalwart, and if you go and analyze the actual condition, actual economy, actual situation which we have done since last 4 years, there might be a crisis looming ahead in 3-4 years or 5 years. Doesn't matter what is the time, but there might be a crisis looming ahead of us.
Correct. And when that crisis strikes, it'll be like 2008 all over again.
Yes, and surprisingly, whenever there is a crisis, even if it is started from US
Or developed
countries, we always see US currency outperforms all the currencies in the world. And in that time, if we take dollar denominated loan, what will be the impact on our country?
Oh,
correct?
Yes,
that is the
that's
key
going to
aspect.
be really
Yes.
crazy.
And that too in the time when economy is just booming or just bottoming out.
Right.
What will happen at that time? Now we are painting picture, but when you are taking external debt, you should be careful, because just go and see what happened in 1999.
So your hedging cost is going to kill you.
Hedging cost, and apart from that, if you are defaulting on debt, this World Banks and IMF, they step in and they say that now you give this asset to foreigners.
Yeah.
That happened in 1999 South Asian currency crisis.
Correct.
That happened everywhere, and that's why external debt is critical. If you want to raise debt, raise domestically.
Correct.
Do whatever.
And
print money. Raise domestically.
Worst case, you do what Rajan said.
Yes, perfect. Long term versus short term.
Yeah. So what Rajan said was that even if you are looking for external debt, take 1-2 years short term debt.
Bridge loan kind of.
And finish it off.
Don't
go for longer term external debt because of all these hazards that have been there.
So take the debt, finish it off just before the entire system popped.
Yeah.
Correct? And come back and hold your ground.
Perfect. And that's excellent, actually.
Yes, that is the
probably should be done maybe.
And that's our view also.
Yeah.
Correct?
Yeah.
Same. Fiscal deficit, shorter term. External debt, shorter term.
Correct. Fiscal deficit also, since the demand only for government bonds is less, your 10-year long-term GSEC is less, and your T-bill demand is still there in the economy.
Correct.
You do it through T-bills, do it through shorter term.
Yeah, definitely.
Correct.
And so obviously these people they are much smarter. They may have a different approach,
maybe
but
some other tool of their sleeve.
Thought process should be like this.
Yeah.
Okay, empowering people has to be there. We all say that people should have money in their hands, either through the wage increase, which is not going to be possible in next few quarters, or through tax cut or the slab change.
Yeah. Also, if you remember the core industry numbers that we saw, the fertilizer number was very high.
Correct.
Lot of money is being spent in fertilizer, but the income of the farmer is not increasing.
Correct.
So there has to be a way to give a direct benefit to the farmer somehow. Maybe you
start some rural farming based infrastructural projects,
or you give them the fertilizer directly. Now, if I am taking the example of fertilizer, direct fertilizer do haath mein.
No, government is trying something, but efficiency is not there.
Correct.
That needs to improve, because guys, slowdown is everywhere. You need to give money at the top to industry. You need to give money at the bottom to people, so that entire cycle moves smoothly and simultaneously.
Also, we see that the government spending is very high.
Correct.
But it's not effective.
Yes, and places like irrigation, where in the country where rainfall is not correct or not sustainable or not certain, and in the country where 60% of the people in farming, I know all these statements you must be hearing since ages.
Numbers.
Yeah. So currently start that irrigation project. 2000 Put 20,000, put 40,000 crores, start the irrigation projects. People will have jobs through Manrega. People will have infrastructure for farming. Do something. That is the way. So this from tax, top 6% people will get benefit. For employment, bottom 60%, that especially rural employment,
has to happen.
Bottom 60% will get benefit. Now, industry push, you must be hearing all of this. We have just added so that our discussions will be well rounded.
Right.
Fund, industry should raise fund and they should have leeway to raise fund, either debt or equity.
Bank should give them funds.
Yes. Last year, money raised through IPO was lesser than dividend paid. This clearly shows you that imbalance in money in big companies to medium level and small companies.
They don't want capital.
Yes. Correct, because what to do?
They are not, this talks about the confidence more than anything.
Correct.
In the economy. They are all on the sidelines waiting.
Waiting to do something or waiting for credit.
Right.
Yes. Now, all these 4 pointers you must have heard: MSME issues, labor laws, ease of doing business, and protect industry from China.
Yeah.
All these things have to be done. We just want to discuss last part,
The
that
China
is
one.
protect industry from China. Correct? You want employment to go up, correct? But you allow Chinese manufacturers to come in India and to dominate. How your industry is going to grow?
Also, China is now aggressively looking to increase their trade balance with Asian countries.
Asian
After
countries.
the US-China war and the deal, they are reducing their trade balance with the US and they are looking to increase the trade balance
with the Asian countries.
which was so far very less and it was practically at par.
And I have guys, just go and see our trade deficit with China. You will go bonkers.
Right.
And that is the official deficit. There are few channels where smuggling happens. There are few channels through Bangladesh and other Vietnam and other countries, but that too in China. Correct?
Right.
Just go and have a look at that. You need to change it.
So
it is should not be allowed.
And the government has been giving anti-dumping duties also recently. So this was likely to continue.
But if you go through Bangladesh, Vietnam into China, and if you bring back the product, what's the use of that anti-dumping duty? Correct? That's the different case. Now, industry push, we have done this. Now, look at this.
So this is our way to bail out the economy.
This is our solution to bail out the economy. What we will do, we will discuss this solution in the next part.
Yeah.
See you in the next session.
In the present part, we have discussed all the tools that are available at the government disposal.
For fundraising.
And
Correct.
the options and Vitark that they can try out.
Correct.
Now we'll discuss our way that what can be done to
revive the economy. The financial engineering part based on our research. Thank you very much, guys. See you in the next session.